Hello, my dear students. A very good evening and a warm welcome to all of you on the discussion of CA Inter RTP of taxation subject. This is ShivaTeja back again in front of you guys to discuss about this RTP and also tell you about some interesting elements that you need to keep in mind for the upcoming examination. So before I begin with the RTP and discuss that, let me tell you some interesting points. That this is the first time that institute is conducting exam in the month of September. Every time, as we know, the exams keep happening in the month of May and also in the month of November. But this time we are having it in September because we don't have November exam. We directly have exams in Jan. So now there is an interesting element to be noted. Lot of times students keep asking me that, sir, in the recent budget, lot of amendments have come, especially amendments have come with respect to capital gain. There are some changes in salary. There are some changes in other sources. Do we need to look at all the changes? First and predominant thing, let me tell you, the year in which you write exam, that year budget will not apply to you. Generally, for May and November students, I keep telling that budget will not apply to you. But now the story is slightly different. That is, for students who are writing in September 24, as well as for the students who are writing in Jan 25. The Finance Act that will be applicable is not the 2024 Finance Act, but that will be 2023 Finance Act only. The recent Finance Act 2024, which have come up last month, the recent Finance Act 2024 is applicable only for May 2025 exam onwards, but not for this September 2024. And that is one fundamental reason what you have to observe, that why we did not release any amendments video as such. Because even for GST as well, whatever amendments we discussed, I repeat once again, whatever amendments we discussed for May 2024, it is the same for September 2024 as well. Be it for income tax, be it for GST, the amendments are same for May 2024 as well as September 2024. So there is no separate effect or there is no separate effort what you are required to take in terms of learning amendments. You are getting my point, everybody? So that is one foremost reason why we did not release any amendments video as such for September 2024, because whatever amendments I discussed with you already for May 2024, the same thing is applicable for September 2024 attempt as well. So this is one key point what all of you should keep in mind. And don't waste your time and effort right now to understand the Finance Act 2024. That effort you take for your knowledge post exams are completed. But now that your exams are fast approaching, I humbly suggest that you should not spend and waste your time on Finance Act 2024 amendments. You look at that once your exams are done, get abundant knowledge. Knowledge is precious, but not now. Because now exams are very close by. We need to focus on what is relevant for our examination. So that is the first and foremost message which I wanted to communicate to all of you before I begin anything further in this session. I'm sure everybody is clear with this point. Can I get some replies in the chat box? Wonderful. Thank you so very much for the participation. Now it's time that I start the discussion about RTP, my dear friends. RTP, which has come up for September 2024. As I always keep saying that RTP is nothing but revision test paper. It is important that students should always look at RTP because RTP is something which gives a fair idea about what kind of pattern questions generally keeps coming in the examination. That's why we always keep telling students that last 2-3 attempts RTP, you look at it so that you get more clarity like this. Yes, so without any second thought, let's start the discussion. And now we are going to spend time on RTP of CA Inter taxation. When I say taxation, we are going to talk about both income tax and GST as well. So both of them we are going to discuss. So without any delay, let's start the discussion, friends. And let me share the screen. Thank you. Done. I'm pretty confident and sure that the screen is visible for all of you. Yes, that's the paper what you're able to see. That's about RTP for November 2024. So the RTP for September 2024. So let's take some good effort in understanding the questions what they gave in RTP. And as we all know that this subject of 100 marks, 50 marks, what is divided, we keep getting questions from multiple choice as well. And we also get questions of descriptive. So let's see that very clearly, my dear friends. Come on. So first, let's talk about the case scenario with respect to income tax first. See the question, guys. Mr. Naveen, age 40 years, is engaged in manufacturing business. He follows mercantile system of accounting. Wonderful. As we already know, when we talk about PGBP, a person can follow mercantile system or he can follow cash system. There's a clear-cut option given to him. The details pertaining to his business for the year ending 31st March 2024 is as under. Capital receipts, 1.2 crores. Turnover, 2.8 crores. Amount received in cash out of turnover is how much, my dear friends? 8 lakh rupees. Now, first of all, let me make you recall an interesting section called 44 AD, which talks about presumptive income for a business, which is applicable for a resident individual HUF and firm. Those turnover does not exceed 2 crores. And one recent amendment has come where even though turnover is more than 2 crores, but it's up to 3 crores, we can still apply 44 AD, provided the cash receipts does not exceed 5% of total receipts. Wonderful. Getting the point, everyone? Exactly. So what is my turnover, my dear friends? 2.8 crores. So let me calculate. 2 crores 80 lakhs into 5%, which is coming to around 14 lakh rupees. But here my amount received in cash is only 8 lakhs. So I can happily apply 44 AD. Amount received in cash out of capital receipt is 2 lakh rupees. Very good. Next, what else I have? Amount received through account pay, check, NEFT and other prescribed mode on or before specified date under section 139(1) out of turnover is 2.5 crores. This point is very much relevant because in section 44 AD, we have got one interesting provision which says that presumptive income is 8% of turnover. However, if the amount is received by way of account pay check, account pay draft, or online transfer on or before due date of return of income, then in that case, my dear friends, the presumptive income percentage is not 8%, it is just 6%. And to the extent it comes by account paycheck online transfer, we'll take 6%, balance will take 8%. That is the logic you have to apply. Next line. Total payments, 1.6 crores. Cash payments out of total payments is 9 lakhs. Net profit as per P&L account is 10 lakh 50,000. So actual net profit as per P&L account is how much, my dear friends? 10 lakhs 50,000. An analysis of the P&L account for the year ended 31st March 2024 revealed the following information. Salary includes wages of 15,000 per month, each paid to 15,000 per month, each paid to one security guard and 2 housekeeping staff. So one security guard and 2 housekeeping staff means totally 3 people. And for 3 of them, each person 15,000 per month. And that too it is paid in cash. If it is paid in cash, that expenditure will be disallowed. Which section talks about it? Section 40, capital A 3, which clearly says it will be disallowed. Next line. Other administrative expenses include how much, my dear friends? 70,000 paid in cash. And they clearly use the language payment in a day is less than how much, my dear friends? Is less than 8,000. So since a single person, single day payment does not exceed 10,000, disallowance will not apply for that 70,000 rupees, my dear friends. Next line. Interest charges includes interest payable on loan to Kamal of 70,000 on which TDS has not been deducted. Loan was taken for business purpose. When the loan is taken for business purpose, you have to understand some interesting point here. That is, since TDS is not done, 30% of expenditure shall be disallowed. And 30% of 70,000 is nothing but 21,000. That will be disallowed. Getting the point? Excellent. Next. On the basis of facts given above, choose the most appropriate answer for question number 1 to 5 below. Number 1. What is number 1, my dear friends? Is Naveen eligible to declare income on presumptive basis under provisions of income tax? I already told you answer is yes. But let's see what is the points what they gave here. First option they gave no, since turnover exceeds 2 crores. That is not the point. Yes, since aggregate receipts during the year do not exceed 5%. Aggregate cash receipts during the year do not exceed 5% of total amount received. It is not total amount received. It should be turnover. Option C, yes, since amount received in cash during the year do not exceed 5% of turnover. So the answer is option C, my dear friends, because you have to get the logic that amount received in cash should not exceed 5% of turnover. That is the reason why you are eligible to declare income on presumptive basis. So answer is option C, my dear friends. Next. What would be your answer to MCQ 1, assuming for the purpose of answering this MCQ and MCQ 3 that Naveen has additionally received how much? 10 lakhs by way of cross check out of turnover. 10 lakhs means already in cash, how much he got? In cash already he got 8 lakh rupees. 8 plus 10 means it becomes 18 lakh rupees. 18 lakh rupees means 5% will be crossed. So what will happen, my dear friends? Option A, no, since turnover exceeds threshold limit of 2 crores. Very good. No, since the cash receipt during the year exceeds 5% of turnover. That is also a correct statement. No, as cash payment exceeds 5%. Cash payment is not a relevant criteria. But A point, B point, both are relevant to points. So answer will become option D, my dear friends. So answer is no due to both A as well as B. So that is the point to be observed. If you have any doubt, you can feel free to ask. Don't hesitate. Ultimately, this session is for you people. Next. Is Naveen required to get books of accounts audited during 23-24? This point is important because in case of books of accounts audit, my dear friends, the point to be noted is we'll apply something called section 44AB. 44AB, what is the turnover criteria? Turnover criteria is how much, my dear friends? 1 crore. However, if the cash receipt does not exceed 5% of total receipt, and if cash payment does not exceed 5% of total payment, then what will happen, my dear friends? Then what will happen? He is required to get books of accounts audited. So third point they are telling. Turnover does not exceed 10 crores. That is not the statement. Amount received in cash during the year exceeds 5% of turnover. And yes, since cash payment during the year exceeds 5% of aggregate payment. How much is cash payment? When I say receipt, I will see total receipts, turnover and capital receipts. Payments. Total payment 1.6 crores. Cash payments out of total payments is 9 lakh rupees. 1.6 crores. 1 crore 60 lakhs into 5%, which is coming to 8 lakhs. But the cash payment, what I made is 9 lakhs. Matter is over. Once the cash payment is more than 5% of total payment, I'm definitely required to get books of accounts audited. So my answer is option C, my dear friends. Getting the point, everyone? Because in tax audit, the criteria is cash receipt does not exceed 5% of total receipt and cash payment does not exceed 5% of total payments. Next. Fourth question. What is the amount of profits and gains chargeable to tax in the hands of Naveen as per books of accounts? When we're talking about as per books of accounts, already I discussed that working with you. What is that figure? 10 lakhs 50,000 is my profits plus. And plus how much is that? Wages paid in cash. 15,000 per month. 15,000 per month into 3% into 12 months, which comes to 5 lakhs 40,000. 5 lakh 40,000 plus 10 lakh 50,000. 10 lakh 50,000 plus 70,000 will not dissolve because each day is less than 8,000. And last one is interest payable on loan to Kamal 70,000. On that 30% will dissolve. So plus 21,000. Total figure is coming to 16 lakh 11,000 rupees. When it is 16 lakh 11,000, let's check the options. So my answer is option B, my dear friends. So that's the story of this MCQ number 4. So MCQs are something which is really scoring, guys. But at the same time, it is also important that you keep in mind that you will not miss out any marks. because MCQs are sometimes very challenging also, because small mistake here and there, 2 marks are gone. Next. What is the amount of profits and gains chargeable to tax in hands of Naveen if he does not want to get his books of accounts audited? If he doesn't want to get his books of account audited, we will apply 4480. 4480, what is total turnover he has got? Total turnover he has got is 2.8 crores. Out of 2.8 crores, 2.5 crores have come on or before due date of return of income. So on 2.5 crores, I'll calculate 6%, and on balance 30 lakhs, I'll calculate 8%. So 2 crores 50 lakhs into 6%. 2 crores 50 lakhs into 6%. It is coming to 15 lakh rupees plus 30 lakh into 8%, which is coming to 2 lakh 40,000. 2 lakh 40,000 plus 15 lakh rupees. Total is coming to 17 lakhs 40,000. So 17 lakhs 40,000. So answer is, my dear friends, option A. So that is the story of this interesting MCQ, my dear friends. Very, very scoring, which actually makes a lot of meaningful sense. Make sense, my dear friends? That's it. Moving ahead, next question. Miss Sarika, an Indian citizen, is in employment with an overseas company located in UAE, but she is an Indian citizen. She is not liable to pay tax in UAE. Very good. She is not liable to pay tax in UAE. So is there a possibility of, what do you call that, deemed resident? That also we'll see, my dear friends. During previous year 23-24, she comes to India for how many days, my dear friends? 121 days. So during previous year, she has come to India only for 121 days. So this is a clear-cut case of Indian citizen. What is that point, my dear friends? This is a clear-cut case of Indian citizen coming to India during the previous year for the purpose of visit. And if an Indian citizen coming to India for purpose of visit, then they have to definitely satisfy 182 days condition. Or second possibility is 120 days in the previous year and 365 days or more during the 4 years preceding the previous year. But that 120 and 365 will apply only to those whose total income other than foreign sources exceeds 15 lakh rupees. So please see that. She was in India for 50 days plus 100 days plus 76 days plus 145 days during last 4 years. So last 4 years, she is there for 371 days. Her annual income for 23-24 is as follows. Salary accrued arised in UAE, that is not in Indian source. Income accrued and arised in India, 2 lakh rupees. Plus income deemed to accrue arised in India, 7 lakh rupees. Very good. Plus income arising and received in UAE from a business set up in India. That means business is controlled from India. So that is also considered, which is nothing but 5 lakh rupees. Next, minus life insurance premium paid by check is 1 lakh rupees. So total income is 13 lakh rupees. So total income other than foreign sources is 13 lakhs. Once it is 13 lakhs, that story of 120 days and 365 days will not apply. You will become a resident only if you satisfy 182 days or more. You might get one doubt, sir, why did you reduce that 1 lakh? You can see the next line. I read that next line already. That is, they have opted out of default tax regime. If it is default tax regime 115 BAC, anyways, we cannot reduce that because we can't take that chapter exit deduction. Except your 80CCD2 and your 80JJAA, 80CCH2 Agnipath scheme. You are required to determine residential status. Residential status is nothing but what, my dear friends? Come on. It will definitely become non-resident. And total income for assessment year 24-25. Total income is nothing but how much, my dear friends? Total income for assessment year 24-25 will be 2 lakhs I'll consider, 7 lakhs I'll consider, 5 lakhs I'll not consider because it is accrued and received in UAE. Correct. Now, why do we tax that in India? She's a non-resident. We don't tax that. Total is 9 lakhs. From that, I'll reduce 1 lakh. So the balance will become 8 lakh rupees. That will be total income. Next. What would be your answer if income arising and received in UAE from business setup in India is 10 lakh rupees instead of 5 lakh rupees? If it is 10 lakh, my dear friends, the total figure will become, instead of 13 lakhs, it will become 18 lakh rupees. Instead of 13 lakhs, it becomes 18 lakh rupees. Once it is 18 lakhs, she will definitely become resident, my dear friends. There is no doubt about it. And that too, she'll become ROR. Because she is satisfying that 120 days and 365 days in the preceding financial year. And moreover, she is there. Moreover, wait a second. Is she there for 730 days? Answer is no. She is not there for 730 days. So she will not become ROR, but she will become RNOR. That is resident, but not ordinarily resident. And the last case, my dear friends. In continuation to point 2, what will be your answer if Sarika comes to India for 22-23 for 45 days instead of 145 days? If it is 45 days, then in that case, she cannot satisfy that 120 days and 365 days. Correct? But there is a possibility of deemed resident concept coming into picture. The reason being very clearly that she is an Indian citizen, total income other than foreign sources is more than 15 lakh rupees, and she is not liable to pay tax in any other country. So in that case, we'll apply the provisions of deemed resident given by section 6, 1A. And deemed resident is always an RNOR, which is nothing but resident but not ordinarily resident. Good. A student is asking one question. Sir, amendments are important. Definitely important, my dear friend. But I already told you at the starting of the session itself that the amendments for September 2024 are absolutely the same what were there for May 2024. That is the reason why we did not give you any separate amendments video for September 2024, because it is the same as May 2024. So if you still want to watch amendments video on our INDIGOLEARN YouTube channel, you have got amendments of May 2024 already, what we recorded 2-3 months back. The same thing is relevant for September 2024 as well. Next point. Question number 7. Anshul, a salaried employee in a private company, furnishes the following information. For the year ended 31st March 2024, basic salary is 75,000 and from 1st December, it is 85,000 per month. First of all, let me scroll down first and check whether it is default or optional. Compute taxable salary if he has shifted out of default. Very good, that is important. Because if out of default only, we can take all that HRA exemptions and all. Next, DA, 50% of basic salary and 40% forms part of salary for retirement benefits. So for HRA exemption, I consider only 40% of DA. And HRA with section 1013A. And what are the limits of HRA exemption? Actual HRA receipt, rent paid minus 10% of salary, and the third one is 50% of salary if house is in Delhi, Mumbai, Chennai, Kolkata, or 40% of salary other than Delhi, Mumbai, Chennai, Kolkata. Next, entertainment allowance 10,000 fully taxable because deduction is only and only for government employees under section 16(2). Next, contribution of employer to RPF account 18% of basic salary. Sir, what is contribution 18% of basic salary? But what is allowed is 12% of basic plus DA. So we'll calculate what is 18% of basic salary and we'll calculate what is 12% of basic plus DA. And that difference will become taxable in the hands of employee. Professional tax 2,200, of which 1,800 was paid by employer. So 1,800 what employer paid, that will take it as income, and 2,200 total figure, we will take it as deduction under section 16(3). And 16(1), we also have something called standard deduction of 50,000. That will also be considered. Next point. House rent allowance, already I told you the working. And the house is in Meerut. When it is in Meerut, what is that you are going to take? We'll take 40% of salary. Next. Conveyance allowance, 1,500 per month by the company towards actual reimbursement of conveyance spent on official duty. If it is actual, then there is no question of taxability because it is entirely actual amount. Next, loan of 2 lakh rupees was taken from the company, from the employer for the medical treatment of his brother for tuberculosis treatment. It's a specified disease. Interest is 5%. Entire loan is outstanding and no medical insurance was taken for his brother. SBI rate is 11%. So let me tell you, nothing will become taxable. Because in case of interest-free loans, it will not be taxable in 2 cases. Number 1, if the loan does not exceed 20,000 rupees. Number 2, loan is taken for treatment of specified diseases. I hope we are clear with this point, my dear friends. Good. Free education was provided to sister of Anshul in a school maintained and owned by company. If it is sister, then that will become fully taxable. Cost of education 900 per month. You have to observe that this is not allowance, this is perquisite. In perquisite, what is the concept already we learned? If it is children, up to 1,000 per month per child will not be taxable. And if it is other than children, there is no limit of 1,000 as such, entire amount will become taxable. Next, leave travel concession given to Anshul, his wife and 3 children. One daughter is aged 6 and twin sons are aged 4. So first we have got daughter, then we have got twins. So exemption will come for all the 3 children. Cost of air tickets, economy class reimbursed by the employer is 20,000 for adults and 25,000 for 3 children. Anshul is eligible for availing exemption to the extent permitted by the law. And this exemption is given by section 10(5), and exemption will come for all the 3 children because first time 1 child and second time it is multiple births. What a brilliant question, and I don't think it is difficult. This question is a very, very comfortable question as such. Yes, next question. Let's look at now question number 8. Karan, a resident age 50 years, furnishes following information. Let me first check default or optional. Compute Karan's total income under default tax regime. Very good. Default. Salary income, very good. Income from let out property. If it's a let out property, my dear friends, one thing is very clear. In case of default tax regime, set off of loss from house property is not allowed. If it is optional tax regime, what will happen? We can set off up to 2 lakhs, balance will be carried forward. But in this case, it is not allowed at all. Next, interest on loan paid for self-occupied property, 1,20,000. That is not allowed at all. Deduction of 24B for self-occupied is not allowed in case of default tax regime. Next, income from sale of rubber plants, from rubber products and rubber plants. In case of rubber, we have got something called Rule 7A, 65%, 35%. 65% of 2 lakhs will become agricultural income, 35% will become business income. Next, business income, retail business 120, wholesale business 1 lakh. Brought forward business loss 1,35,000. We'll set off that loss to the extent available, but first always set off current year, then only set off brought forward. Dividend received from ABC Limited, an Indian company carrying on agricultural operation. So this will definitely be taxable. And they gave the figure as 13,500. That means generally dividend is given after TDS is done. So if it's 13,500 means it is after TDS. So before TDS will be 13,500 into 100 by 90, which comes to 15,000 rupees. Next, long-term capital gain from sale of listed shares, STT paid on sale as well as purchase of shares. What is the figure? We'll take 2 lakhs. Short-term capital gain on sale of shares, 1,10,000. Now tell me, my dear friends, can I set off? 100% answer is yes. Because long-term capital loss can be set off only with long-term capital gain, but short-term capital loss can be set off with both short-term and long-term. And I'll show the figure of entire 2 lakhs, my dear friends. From 2 lakhs, I'll reduce 1,10,000. Next point. Long lottery winnings, gross figure, how much the figure? 45,000. I'll take that under which section? Where, my dear friends? Which head of income? Income from other sources. Contribution to PPF, all that deduction will not come. Income of minors and Raju from special talent. If it is special talent, clubbing provision will not apply. Section 64, 1A. Next, interest from bank received by Raju on deposit made out of his special talent. This income will be clubbed. Now, one doubt can come in your brain immediately. Sir, the moment you say clubbing will apply, we will take section 1032 exemption of 1,500, sir. Answer is no. Because section 1032 exemption of 1,500 will come only in case where person has opted out of default tax regime. Getting my point, everybody? Good. Next. That's it. That's the story of this very, 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 very interesting question, my dear friends. Next case. Question number 9. In each of the following independent situation, you are required to examine whether these persons are required to file return of income or loss if their total income do not exceed basic exemption limit. Generally, if total income before deduction under Chapter 6A or before capital gain exemption, if it exceeds basic exemption limit, return of income is mandatory as per section 139(1). But in some cases, return of income is required even though total income does not exceed basic exemption limit. See the first point. Turnover if business is 65 lakh. Definitely return of income is mandatory. I'll tell you why. Because if the turnover from business is more than 50 lakh rupees, filing of return of income is mandatory, even though total income does not exceed basic exemption limits. Subhash has incurred total expenditure of 90,000 towards consumption of electricity. Not required, because electricity case the point given is expenditure is more than 1 lakh rupees. Next, Deepak has savings account in SBI and HDFC and a current account in Axis Bank with opening balance of 20 lakh rupees, 10 lakh rupees, 30 lakh rupees. Okay, 20 plus 10 plus 30. The total is 20 plus 10, 30, 30 plus. Okay, wait. 20 plus 10. Opening balance. Okay. 20 opening, 10 opening, 30 is also opening. Very good. He deposited 40 lakhs in SBI, 25 lakhs in HDFC. So total on savings account is 65 lakhs. And 75 lakhs is deposited in Axis Bank current account. There is one point which says if you have deposited more than 1 crore in current accounts, one or more current account, or more than 50 lakhs in savings account, then return of income filing becomes mandatory. In this case, current account he did not deposit more than 1 crore, but savings account he deposited more than 50 lakhs. That is the reason why return of income becomes mandatory for him. Next point. Kumar, aged 50 years, has withdrawn a cash of 1 crore 20 lakhs during previous year 23-24 from savings account in HDFC Bank. Kumar regularly filed return of income. If you regularly file, if it is more than 1 crore, then bank will do 2% TDS on amount exceeding 1 crore as per section 194M. So on 1 crore 20 lakhs when he has withdrawn, TDS will come only on 20 lakhs. On 20 lakhs, 2% is 40,000. Here there is a catch point. If the aggregate of TDS and TCS is 25,000 or more, then filing of return of income becomes mandatory. So in this case also, he must file return of income, my dear friends. So that is the story of all these questions what we have with respect to which, my dear friends, income tax. And finally, one last question we have, that is with respect to total income computation. You can see that. Anand, a resident Indian, age 45 years. Any doubts you have, you can type in the chat box, friends. I'll definitely answer your query. He owns INDIGOLEARN'S, which has commenced operation during financial year 1920. And total turnover was 200 lakhs. Export turnover, what he has received in India in convertible foreign exchange. How much is that figure, my dear friends? Come on. On or before 30th September is 120 lakhs. And in the question they gave, it is 1920. It is 1920, 1920, 2021, 21-22, 22-23, 23-24. So he is in 5th year of operation. If it is 5th year of operation, we can take 100% deduction of what? Profits into export turnover divided by total turnover. Export turnover is 120 lakhs. Total turnover is 200 lakhs. So 35 lakhs into 120 lakhs divided by 200 lakhs. I can take section 10AA deduction. But that will come only in case where I am out of default tax regime. Next. Anand sold equity shares of different companies. Sale price is given, purchase price is given, STT paid is given. Acquired date is given, number of shares is given. FMB on 31st Jan 18 is given. 31st Jan 18 is relevant in case where shares are acquired prior to 31st Jan 18. We'll take original cost or the market value on 31st Jan 18, whichever is higher. CII numbers they give, that is relevant for us because we're talking about something called section 112A. In section 112A, there is no question of taking indexation benefit, my dear friends. Next. Sale proceeds were subject to brokerage and STT. We cannot take the deduction of STT, but we can definitely take deduction of brokerage because we'll start with full value of consideration, reduce expenses on transfer other than STT. Next. He made payment of 90,000 on 1/9/23 white check towards medical insurance as lump sum premium for himself and his wife till 31st August 2027. 2023 he paid till 2027. 23, 24, 25, 26, 27. He paid for a period of 5 years. Correct, no? So that 90,000 I'll divide by 5, which comes to 18,000 rupees. And he also made cash payment of 7,500 towards preventive health checkup. I cannot take 7,500, I can take only 5,000. But that too, this all point is given by section 80D, which I am eligible to take only in case where I shifted out of default tax regime. Next. He received royalty of 2,88,000 from abroad for a book authored by him in the nature of artistic. and the rate of royalty is 16% of the value. For deduction under ATQQB, I'll take only 15%. And expenditure made for earning royalty was 40,000. Amount remitted to India till 30th September is 2,50,000. So whatever is remitted within 6 months from the end of the previous year, that is only considered 2,50,000. From that, whatever expense already we have taken, deduction of 40,000, that I'll reduce, and the balance deduction what I'll take is only, my dear friends, 2,10,000. For the purpose of computing income, I will take 2,88,000 minus 40,000. But for the purpose of deduction under section 80 QQB, I'll take 2,50,000 minus 40,000. But here there is a point to be noted that this 80 QQB story will come in case where I shifted out of default tax regime. Next. He received income tax refund of 15,750, including interest of 1,750. That interest I'll take under interest on income tax refund, I'll take under income from other sources. He occupies ground floor of the building and has let out first floor. He has paid municipal tax for the current financial year, both floors of equal size. He has taken loan from the bank for construction of the property and has repaid so and so amount during 23-24. So in case of repayment of housing loan, I can take 80C deduction, my dear friends. And moreover, there is an interesting point to be noted, that is 24B deduction for self-occupied property I cannot take in case of default tax regime. But if I shifted out of default tax regime and if I come to that optional tax regime, I can definitely take that deduction for self-occupied property as well. Are we getting clarity, my dear friends? Everyone, come on, please reply. For every point, I'm clearly telling you what is going to happen in case of default tax regime and also in case of optional tax regime, so that you get a complete clarity of this point, my dear friends. Next. Earn and deposited 1,30,000 in PPF. That also he can take 80C deduction, but that too only under what, my dear friends? Other than default. And 80,000 in 5 years term deposit in the name of his minor son. If it is minor son, for that he can't take deduction for a simple reason, because for 80C purpose, all investments are to be made in the name of assessee only, except for one case, that is life insurance, where it is for self, spouse, and children. Next. You are required to compute total income and tax liability of Anand under section 115 BAC as well as under normal provisions for assessment year 24-25 and ignore the provisions of AMT. What a brilliant question, my dear friends. And I'm pretty confident and sure that we got complete clarity on this question. And for every point, I clearly told you what is the treatment you are going to give in case you are paying tax under a default tax regime and in case where you are paying tax under an optional tax regime. Friends, I'm sure you got a complete clarity on these points. Excellent. So that's the story of this income tax discussion related to RTP of September 2024. Done? Excellent. So without any delay, my dear friends, let's proceed to discussion on GST as well. So let me share the screen. Just a second, guys. Yeah. All clear, sir. Thank you, sir. Thank you. Thank you. I'll share the screen. I'm sure the screen is visible for all of you now. Please confirm. Wonderful. Thank you very much. XYZ Private Limited is a mid-sized company registered in Delhi. Now shift all your brains from income tax to GST, goods and services tax. See now, dealing in manufacturing and distribution of electronic goods in India. The company has been operating for over a decade and has a robust supply chain network across the country. Company needs to ensure compliance with various GST regulations related to return filing, registration, and payment of tax. And the company is exploring to expand its sales channel in India through distributors in each state. In view of the same, company has undertaken the following activities in the month of June. Organize a distributor conclave in Udaipur, Rajasthan, where the distributor from Rajasthan, Gujarat, Madhya Pradesh participated in the conclave held in Rajasthan. And total cost of accommodation was 25 lakhs, which was paid by Delhi office to the hotel located in Rajasthan. So hotel is in Rajasthan and Delhi office paid it to the hotel in Rajasthan. Company purchased certain gift items for distribution to the participants in the conclave. Gift items were purchased from vendor located in Ludhiana, Punjab, and were delivered to the hotel in Udaipur, Rajasthan for the distribution to the participants of the conclave. And the cost of such gifts was 25 lakhs. However, the value of individual gifts was restricted to how much, my dear friends? 75,000 rupees. Good. Let's see what they're going to ask. Company purchased an insurance policy for employees traveling for the conclave, and the premium for the insurance policy was 1 lakh, which was paid by the company. Sir, I'm sure we are getting clarity on this point, my dear friends. Friends, come on, please reply. A very, very interesting question as such. Yes, friends, I'm waiting for your participation. Good. Thanks for the participation. Come on, get back. Company purchased an insurance policy for its employees traveling for the conclave, and the premium for the insurance policy was 1 lakh, which was paid by the company. There is no requirement under any law requiring such policy. So there is no statutory obligation to take that policy. Company took on rent a new warehouse near its factory in Delhi for storage and dispatch of the goods. The goods are being transported between the factory and the new warehouse in a non-motorized cart. If it is not motorized, then label is not required. Value of the goods in single trip is up to 5 lakh rupees. Further, rent of the warehouse is 18 lakhs for the initial 11 months, and the same shall be revised to 21 lakhs after expiry of 11 months. The rate of tax is 18% IGST, 9% CGST, SGST. On the basis of facts given above, choose the most appropriate answer. Which of the following statement is correct under GST law in relation to hotel accommodation service received by the company? Hotel shall charge CGST, SGST in the invoice issued to the company. There is no second thought about it. That answer is directly option A, my dear friends, because hotel is definitely going to charge CGST and SGST because of section 12(3). Place of supply in relation to immobile property service is the place where property is located or intended to be located. Next line. What shall be the place of supply in relation to gift items purchased by XYZ Private Limited? That's a clear-cut case of build to ship to model. We will take the principal place of business of the third person, which is nothing but Delhi. I'm answering this question based on a provision known as section 10(1)(b) of IGST Act, build to ship to model. Third question. Which of the following statement is true in relation to gift items and insurance policy purchased by the company? Option A, company is not eligible to avail ITC. That is only correct. No second thought about it. Because in case of items given as gift or free samples, there is no question of claiming input tax credit. Next. Which of the following statement is correct in relation to issuance of e-waybill? I already told the answer to you. E-waybill is not required in case of non-motorized cart. E-waybill is not required in case of non-motorized cart as such. So e-waybill is required to be issued for irrespective of value. No. E-waybill is not required irrespective of the consignment. So answer is option B, my dear friends. because it's a non-motorized cart. In case of non-motorized conveyance, e-way bill is not required. Which of the following statement is most appropriate in relation to new warehouse taken on rent by the company? Separate registration is not required. Wait a second. Where did they take the warehouse? Let me just go back to the question. They are in Delhi. Company has robust supply chain. Company took on rent a new warehouse near its factory in Delhi only. If it is Delhi only, that separate registration is not mandatory. It is only optional. Sir, for multiple place of business within the same state, separate registration is optional. Separate state, separate registration is mandatory. So my answer will be option A, my dear friends. Separate registration is not required mandatorily, my dear friends. That's it. That is the story of this interesting MCQ. So GST generally doesn't take that much of time while solving, my dear friends. Clear? Excellent. Next point. Question number 6. Craft Model Limited, a registered dealer in Patna, Bihar, is engaged in various types of supplies. It is not engaged in renting of cars business. Outward supply of goods made during the month to non-related person. In the state of Bihar, market value they gave, transaction value they gave. So what is that we'll take is only transaction value, my dear friends. To other states, 6 lakh rupees. What is important for us is only the transaction value. There is no second thought about it. But for intrastate, we'll calculate CGST, SGST. For interstate, we'll calculate IGST. Company pledged 5% of the shares to merchant banker for the purpose of initial public offering. There is a clear-cut transaction in shares. There is no GST at all. Because definition of goods does not cover securities. Definition of service also does not cover securities. And security covers shares. So on the shares, GST will not apply. Next. Stock transfer. Stock transfer in GST law it will be taxable. But let's see. Without consideration to its branch in Gaya, Bihar. Branch has been declared as additional place of business. Wow. If it is additional place of business, it is not a distinct person. It is the same GST number. So this transaction will not be taxable because what is covered in law is only supply between distinct or related person. Next point. Intrastate supply of various services for use in the course of furtherance of business. Inward supply. Out of 30 invoices, 10 invoices amounting to 250,000 were not furnished by supplier in GSTR1 and they are not reflected in GSTR2B. Concept is very simple. Whatever reflected in GSTR2B, that much only we can take input tax credit. There is no question of claiming input tax credit more than what is reflected in GSTR2B. Next point. Outward supply of service of milling of paddy into rice. Milling of paddy into rice is definitely taxable because it is not an intermediate process in relation to cultivation of plants or agricultural produce. So there is no exemption as such. This will definitely become taxable, my dear friends. Are we getting the point, everybody? Next. Outward supply of services of giving trucks on hire to governmental authority. If it is governmental authority, so what? It will still definitely become taxable, my dear friends. Are we getting clarity, my dear friends? All of us, please reply. Good. Amount paid to IIM Ahmedabad, Gujarat for providing 15 days management training for 10 managers from 10th of January. IIM provided participant certificates at the end of the training program. On this, definitely, my dear friends, GST will be applicable because for short duration courses, there is no exemption as such. GST will definitely be applicable. But whatever GST you pay, that will take it as input tax credit because it is used in the course of furtherance of business. And in case of training and performance appraisal service, let me tell you, place of supply for registered person is the location of such person. Next point. Purchased air tickets for employees from Patna to Guwahati, Assam. Sir, in economy class. Wow. So this will be exempt, my dear friends. So there is no question of GST as such. Why it is exempt is very clearly because transport of passengers by air in economy class. in an airport embarking or terminating in Assam, Manipur, Mizoram, Nagaland, Tripura, back to Ogra located in West Bengal, it will be exempt. And that exemption will come only when it is in economy class, my dear friends. Yeah, before I proceed, I have some queries. So give me PDF, answer PDF. Answers I have been discussing already with you. So there is no answer PDF as such. That's already there in their RTP. This type of question once asked in November 22. Correct, absolutely true. Somebody is telling short-term taxable, long-term not taxable. Correct. That day I think they're talking about something called IAM courses. Correct. Next point. During the course of arranging and filing documents, accountant observed that an invoice dated 2nd December was omitted to be recorded in the books of accounts and no payment was made till the end of January. This invoice was issued by Rao Ketu, a partner from whom Craft Model has taken car on rental basis. Wow. And invoice included cost of fuel also. So if invoice includes cost of fuel also, and the supplier has not issued invoice at 6% GST and all, then in that case, my dear friends, recipient is liable to pay tax under reverse charge mechanism. That too only in case where supplier is body corporate, recipient is other than body corporate. This case that is clearly satisfying. So that is the reason why RCM provisions will come into picture. But you have to look at something called time of supply. What is time of supply for RCM? Date of payment or 61st day from date of invoice, whichever is earlier. So based on the time of supply, we'll consider that. But for this renting of motor vehicle, you cannot take input tax credit as such because the input tax credit is blocked in case of renting of motor vehicle. Next point. Pledging of shares, face value of the shares, market value of the shares, that is not relevant for us. Car rental service already we discussed. No opening balance exists. Compute net GST payable. That's it. Such an interesting, simple point. And a very, very scoring point as such. That is also true. Next. Any other query? Let me check. That's it. No query as such. Briefly examine the taxable value of supply in the following independent cases. G1 Limited registered under GST, provided services amounting to 10 lakh rupees to governmental authority by way of sanitation conservancy. This will definitely become exempt. It's one new point which has come up in the exemption list. Raju Transporter registered GTA, provided service of transportation of goods to Kukreja and Kukreja, unregistered partnership firm. Even though it is unregistered, so what? Please take registration and pay tax under RCM. But of course, GTA has got an option to opt for forward charge, but that story is not given. So that is the reason why recipient will be liable to pay tax under reverse charge mechanism. Next point. Amardeep Hospital provided services in neonatal intensive care for 2 days, for which 15,000 are charged per day. Even though it is more than 5,000 rupees, my dear friends, it will be exempt because 5,000 limit, more than 5,000 per day for hospital, it will become taxable normally. But if it is in case of ICU or critical care unit, cardiac care unit, neonatal intensive care unit, it will definitely be exempt without the limit of 5,000. Are we getting clarity, everybody? Excellent. Wonderful, wonderful. I love the participation, guys. Ranmo Limited, a registered entity, has demerged its operation with effect from 31st October. Registration has been cancelled suo moto by proper officer. Very good. Order of cancellation was passed on 4th of November and was served on 7th of November. Ranmo Limited wishes to apply for revocation of cancellation on 4th of February. They can. Very good. Let me tell you the answer also why. Because this concept of revocation of cancellation is actually given by section 29, my dear friends. 29 is cancellation, 30 revocation of cancellation, which clearly says any person can apply for revocation of cancellation within 90 days from the date of service of order of cancellation. And moreover, that period of 90 days may be extended by the commissioner or additional or joint commissioner for a further period not exceeding 180 days. But the basic time limit itself is 90 days. And in this case, my dear friends, they are applying within 90 days. So application is definitely valid in the law. No doubt about it. Are we clear with this point, everybody? Excellent. X registered person under GST has aggregate turnover of 8 crore rupees. He is desirous to know whether e-invoicing is applicable for supplies made by registered person to government department which are registered solely for the purpose of TDS. Hence, we know the concept already. That is, e-invoicing concept is applicable to every person, every registered person whose aggregate turnover in any finance year starting from 17-18 exceeds 5 crore rupees. It is not applicable for government department. That means government department do not do e-invoicing. But if, let us say, ShivaTeja is supplying to government department, then definitely I should do e-invoicing because government department is registered for the purpose of TDS, and any department registered for the purpose of TDS are also regarded as a registered person. So it will become a B2B transaction. If it's a B2B transaction, e-invoicing is required. Finally, one last question, my dear friends. Briefly explain the manner of dealing with difference in ITC in auto-generated statement containing details of ITC and that availed in the return. That means what? In GSTR 2B, your input is 1 lakh rupees, but you have claimed 1.5 lakh rupees. If you do that, my dear friends, there is an interesting rule called Rule 88D, which clearly says that before you file next month return, one notice will come. Intimation will come online telling what is the reason that you claimed more than GSTR 2B. And you definitely have to reply to that intimation, my dear friends, within a period of 7 days. Either you explain the reason. See, law is not asking you to pay. Either explain the reason or you pay. That you have to do within 7 days. You're getting my point, everybody? And if you don't pay within 7 days, or if you don't explain the reason, my dear friends, then the officer will proceed to issue the notice under section 73-74, which is nothing but demand notice. A very, very interesting provision, my dear friends. So that is the story of this interesting last question, my dear friends. And that is the story of this RTP of CA Inter Taxation. So we have spent time on income tax. We have actually spent a very good time on GST as well. So that's the end of story of CA Inter Taxation RTP for September 2024 attempt, my dear friends. And as I told you already, with respect to amendments, whatever amendments you learned for May 2024, it is absolutely the same for September 2024. So there are students who already wrote exam in May, but for unfortunate reasons you could not clear. I wish you all the very, very best for September exam, my dear friends. Ensure that you don't repeat any mistake, whatever happened in May, and you put your fullest effort and take complete effort for the next some case and write the exam with utmost accuracy and utmost perfection and come out with flying colors. So I wish you all the very, very best, my dear friends. And I wish you all the very best and I wish you all success to come out with flying colors, and your success is our happiness. Thank you so very much. Take care. ShivaTeja signing off. Bye-bye.